And gentlemen, we're back with another video today, the expected moves for your favorite stocks. Now, over the course of the beginning of 2019, we have created quite a bit of content about this concept, this idea of expected moves. We first started with a video talking about how to figure out the expected move for the S&P 500 over the course of an entire year. And then we were able to say, well, we have that, but can we also figure out what the expected move is for more or less time than 1 year? And we were able to show that in a video. And then on top of that, we had a lot of questions from some of our fans saying, well, hey, Steven, can we find this expectation for other stocks? And we showed that via how to find that with crude oil. And now all of those videos have been linked in the description below, but now we're going to take it a step further and show you how to find this information for some of your favorite stocks. Now, first, a crash course. What is the VIX? Because it all has to do with the VIX. According to most financial media, CNBC, Jim Cramer, Bloomberg, the VIX is the fear index, which is a numerical representation of the amount of fear or risk at any given time, which is shown by the buying and selling of options on the S&P 500. Now, that is what they will tell you it is, but I have a much different viewpoint of that. My viewpoint is the VIX is the 1 year expected move in the S&P 500, and I'll be able to prove just how accurate my guesstimation is. Now, to determine that number, we take the S&P 500 price and we just multiply it for the VIX. That will give you what the expected move is in the S&P 500 for the next year. So if we have an S&P 500 price of $2,500 and a VIX of 20, that means over the next year, the market participants are betting on that the S&P 500 will close the year within $500 higher, which is $3,000, or $500 lower, which is $2,000. And then we take it a step further and said, well, that's great, Steven. 1 year and finding out that calculation, that's great. But can I break it down to either less time or more time? And the answer is yes. We can absolutely find the expected move for the S&P 500 in a time frame that is less than or greater than 1 year. And the way we find that is we take the S&P 500 price times the VIX, like we did before, but this time we're going to just multiply it by the square root of the amount of days you're interested in over 365. So if we had to take a look at one example, we take our $2,500 S&P price, we multiply it by our 20 VIX, and then we multiply it by the square root of 30 for the 30 days that we're interested in figuring out this calculation for over 365, and we get plus or minus $143.35, which with a $2,500 S&P 500, that is up or down 5.7% in the next 30 days, meaning the high end of the range, assuming the exact same S&P 500 price and the exact same VIX, the high end of the range being $2,643.35, and the low end of the range being $2,356.65. Now, another step further, what about other stocks? Well, the truth is, for a lot of our favorite stocks, there is also a quote-unquote VIX. There is a stock symbol that will allow us to determine the expected move, and there's quite a bit of very popular stocks that we have this for. We have this for SPY, QQQ, which is the NASDAQ Index ETF, DIA, which is the Diamonds. We have EEM, Emerging Markets, FXI, EWZ, which is Brazil. We have USO, which is oil, GLD, gold, SLV, silver, GDX, gold miners, XLE, I think it's energy. FXE is the euro. Then we have FXY, which is the Japanese yen. FXB, which is the British pound. We have Amazon, Apple, Goldman Sachs, Google, and IPM. So we have the VIX for all of those. So here's the deal. We did a little study like we always do. 1980 to present. Now, not all of these symbols have traded for the last 37 years. So just as long as we can get for all the symbols that didn't trade 37 years previously. So what we did was on January 1st of every single year, we calculated the 1 year expected move for all those stocks. And then at the end of the year, December 31st, we checked to see if those stocks closed within their 1 year expected moves. And then on top of that, we also noted if the price of the stock went outside of this expectation, either up or down, at any point in the year, and compared it to that closing expectation. And it turns out, again, the numbers are very, very similar if you've seen any other of my videos especially when it comes to this presentation, you will know that these numbers are very, very similar to what we had for the S&P 500 and what we had for crude oil. These stocks, and there's about 18 of them, they close within their 1 year expected move 88% of the time. Now, yes, they do go higher than their expected move at any given point, about 40% of the time, and lower about 30% of the time. But when they go higher than their expected move, they do pull back and come lower 82.25% of the time to close within their 1 year expected move. And the same goes for once these stocks are below their expected move at any given point in time for the year. They do go higher and finish the year within that expected move 79% of the time. So really, what can we do to take money from this? Well, on January 1st of every year, we can calculate their 1 year expected move of all these stocks. And I'm going to show you in about 30 seconds how to do that. We can write down these high end of the range and low end of the ranges with sticky notes. We can add these ranges and price levels to our trading platform. But here's the deal. If these stocks break above their 1 year expectations at any point in the year, 88% of the time, they will pull back to finish lower within their expected move. That's a big deal. So if we're long these stocks, maybe it's a good time to take some profits because there's an 88% chance that although at that point they're higher than their expected move, they will come back to be lower by the end of the year. And the same has to go for when these stocks break below their 1 year expectations, right? 79.85% of the time, when any point at all during the course of a year, they break below their 1 year expectations, they do come higher, right? Again, 79.85% of the time to finish within their 1 year expectations. Now, I made you guys a little bit of a goodie here. I made you a nice little expected move calculator. So you can see on the screen right now, we have all those stocks. SPY, the Qs, Diamonds, EEM, you name it, all the way down to Goldman Sachs, Google, and IBM. So what I've made is a little bit of Google Sheet, and I'll post in the description below exactly how you can copy this directly to your Google Sheets to be able to have this information for you in real time. Now, what this is in cell E1 up here, which is highlighted in yellow, you can choose the amount of days that you care about. So let's say you're only interested in the next 7 days. Everything will autofill here. So in SPY, with the exact same information I have in front of me as shooting this video, which is March 6, 2019, around 3:37 p.m. Eastern Time, the 7-day expected move in SPY is up or down about 5.94 points, which in percentage terms is about 2.14%, with the high end of the range being 283.14 and the low end of the range being 271.26. We could also take it a step further, let's say over the course of the next year. So we can go down to Amazon, right? Over the course of the next year, based on all the information we have today, the 1 year expected move in Amazon is up or down $433.06 from here, which is a 25.93% move up or down. Meaning, as we stand here today, as I'm shooting this video at 3:38 p.m. Eastern Time, the high end of the range over the next 365 days in Amazon is $2,103.16, and the low end of the range is $1237.04. And again, over the last 37 years, when applicable, all of these stocks close within this range about 88% of the time. We can take it a step further. Apple, for example, over the next year, based on the information I have today, do you think Apple might go to 250? Well, the reality is it might, but there's a less than 10% chance that it actually does, because again, there's an 88% chance that Apple will close out 365 days from the day I'm shooting this video within below 212.67 and above 136.31. So again, I'm going to have a link in the description below this video to go ahead and download this material so that you can go ahead and copy it to your individual Google Drive and be able to have this information without asking for your email address in front of you every single day. Good luck. I will see you all on the next video.